Welcome, everybody. I'm David Kirkpatrick, the founder of Techonomy, and I'm really happy that we're going to be having a quite wide-ranging discussion today about technology in climate and the investing climate for climate tech, with two really knowledgeable speakers. We're happy to have them both. Donnel Baird is the CEO of BlockPower, which is a really interesting company that I'm going to ask him to define in some detail in just a moment. But he made the transition from being a political activist and then at least briefly a labor activist to being a climate tech entrepreneur. And I'm eager to hear how that transition happened and why and what some of the thinking was behind that. BlockPower works especially in underserved communities to push electrification as an alternative to fossil fuel-based energy, especially in commercial buildings and apartment buildings and things like that, if I understand correctly, but eager to hear more. Avra is, who we also thank for introducing us to Donnel, is the Chief Operating Officer of Elemental Accelerator. I hope Donnel is about to rejoin us, but anyway, we'll at least we know he's coming. Avra was herself, she's a lawyer who was previously a senior executive at Jump, which was a scooter company acquired by Uber. She then worked for Uber for a while. Then she did a few other things, but she is now the COO of Elemental Accelerator, which is a quite unusual nonprofit that invests in for-profit climate-related companies, startups. That's gotten a lot of its funding from Laureen Powell Jobs Emerson Collective, based interestingly in Hawaii, although Avra is in Brooklyn. I'm going to ask her to elaborate on all that. Maybe I should just, well, let me first give a little big picture on what we're doing here. So those of you who have been with us the last 2 weeks, this is our third roundtable we're having as part of the lead up to a conference that Techonomy and our sibling publication Worth are hosting September 20th in Manhattan at the City Winery near Chelsea Piers, which is called The Health and Wealth of Our Planet. The conference is all about business, climate, and sustainability. And we take the view that companies that aren't concretely, deliberately, and transparently moving towards climate action in their work don't deserve to exist. That's basically our increasing view. And the more I live in a drought and read articles about the droughts in the Yangtze Basin, the Colorado Basin, the Rhine Basin, et cetera, and then just the other day coming down on Amtrak from Rhinecliff, I noticed about a quarter of the trees on the west bank of the Hudson River are dead. That's a new thing. And then if you read about the global bird flu epidemic, my God, wild birds are dying by the tens of thousands. Even some of the most beautiful, gigantic seabirds that used to coat the coast of Scotland are dying at massive rates. The climate is changing frighteningly quickly. We all have to take action. So what we're talking about today is, from a business point of view, from an investing point of view, how can that be done? Glad to have you back, Donnel. Anyway, we had a session 2 weeks ago on carbon accounting, which was quite interesting. And then last week we had a session on the sustainability of Web3, which was quite interesting because I and the overwhelming majority of our attendees were deeply skeptical about both metaverse and blockchain and Bitcoin related and crypto, not so much blockchain per se, but the crypto and metaverse skepticism was just dripping from our audience last week. And when you talk about sustainability, I don't think anybody here thought there's anything fundamentally sustainable about both in the, well, maybe a little bit sustainable as a concept, but there's absolutely no reason to think that those developments are happening in a climate conscious way. So that was last week. We hope everyone who's here with us today will join us at City Winery in Chelsea Piers on Tuesday, September 20th. So quickly finish on that. Our speakers include Eileen Fisher, the co-president of the Club of Rome, Sandrine Dixon DeCleve, Seth Godin, who's just written a book called The Carbon Almanac, the CEO of Rocky Mountain Institute, the head of EDF Plus Climate, the chief sustainability officers of FedEx, Ericsson, US Steel, one of the top sustainability people at Citigroup, the head of sustainability investing at Jefferies, a number of startups. It's going to be a meaningful event, and we're getting great interest in it, and you're all invited. So you'll get a discount code to register after this. So let me, with that somewhat disjointed introduction, turn it over to perhaps Avra to just start, explain what you do, and give us just 2 minutes on how you see the climate tech ecosystem evolving and the investment aspect of that.
Sure, absolutely. Well, first of all, thank you for convening this panel. Thank you for having us today. It's great to see you, Donnel, and I'm excited to talk to you all. So what we do at Elemental, it is interesting and somewhat unique. So we are a nonprofit climate investor. We have been investing in climate technologies for over a dozen years, and to date have funded over 130 companies. But our mission is larger than investing. So we are actually out to redesign the systems at the root of climate change. So for instance, by, as we're thinking about scaling climate technologies, also thinking about how to bring in and pay community partners in de-risking and improving deployment outcomes. And as another example, for instance, in creating frameworks for companies to incorporate equity, that's equity in their growing orgs, and that's equity out in the communities where they launch. Over 40% of our projects are actually in frontline communities hit first and worst by climate change. So on the technology side of things, we fill a unique gap. In between MVP and commercial scale, you have the complexity of deploying technology in the real world with real customers and real people. And with climate technologies in particular, and I think probably folks in the audience know this well, the path to scale is often, nonlinear and complicated. You require significant capital. It involves numerous strategic and community partners. It calls for thoughtful, complex, and iterative deployments. So more times than not, in fact, from our own Elemental portfolio, we see companies experiencing some fundamental game-changing evolution after their first deployment. So we created a framework actually called the Commercial Inflection Point Scale to dissect and evaluate how we support commercialization of climate technologies through these different stages. And to zero in on the challenges in scaling, we make investments in programmatic support. We have an accelerator program, and we provide this holistic hands-on programming to try to help climate companies move through the valleys of death and the commercial inflection points with an all-important layer and important framework of equity, because we know that the best solutions are the most equitable. So we help our companies identify and work with industry partners. We have them help them identify customers. We help them work with community groups through what we call our Square Partnership model. We have a policy lab, and we help them work with government partners. So it really is a holistic suite of services to try to propel our portfolio companies through the sort of different commercialization steps, and to do so with equity at the fore. So the state of, what was your question again, David? What is the state of climate investing? Oh, you're muted.
You're a unique climate investor, so I think that and I want to hear more about Elemental's approach, but yes, given what you've concluded and that led you to create Elemental in the manner you have, I know you didn't create it, but your colleagues, etc. What is it? What perspective does that give you on the larger climate tech ecosystem? I guess that's, and what are they missing, and what we can get into the pluses and negatives in detail later, but some quick hot button points, and then we'll get to Donnel at the airport in a second.
Yeah. So what are they missing? I mean, I think like I was describing, we do things a little bit differently. We are a nonprofit, which gives us the freedom to do some things differently. We focus on supporting companies through this gap, which I think what we see is that this gap still exists, right? It's like you might have early stage funders really focused on that initial MVP and that 0 to 1. And then you have later stage funding focused on scale once a business model is proven. And there still is this gap in between, is what we see. And we really try to support that gap in between. There's a role for philanthropy in that gap. There's a role for investors in that gap. I think the focus on equity is one that we really believe strongly, and we think we think incorporating equity through these different frameworks is going to improve outcomes. And I think that that's an area where additional investors can think about leaning into. And I think this sort of hands-on holistic support, the actual project development support, is really an important area to pay attention to. So what we see is, because we really invest across the climate spectrum, from technology to energy to circular economy to and beyond, we see a lot of different technology companies, and we see that there is a growing number of investors. There are over 100 climate funds alone now that did not exist a dozen years ago. So there's a lot more money pouring into the space. I'm sure we'll touch on the Inflation Reduction Act eventually, but there's a lot more funding coming into the space, and we're seeing a lot of new dedicated funds, and that's really exciting. And what those funds can do, in addition to the philanthropy dollars pouring in, is think about these gaps, think about these holes.
That's really helpful. Yeah, 180 climate tech venture firms of one type or another, according to Climate Tech VC, which is, by the way, both the co-founders of that will be speaking at our climate conference in September. I should have mentioned that before. Donnel, thank you so much for clearly fitting us into a busy schedule. Are you at Dulles, or what airport are you?
I'm at JFK, one of the quietest.
Oh, is that the TWA terminal I was seeing in the background? Anyway, the old classic. Anyway,
right.
Well, thank you so much. I knew it was something swoopy. That's why I thought it was Dulles. Anyway, really happy to have you. I think you should start, if you don't mind, by telling us a little bit about Block Power, and possibly a tiny bit about your journey to come to create it. And then maybe we get into the climate investing piece after that.
Great. I'm super excited to be here. Avra is a dear friend, and always want to learn from her whenever I can, even if it's on a panel. I'm a lot less elegant than she is. I think, at Block Power, we focus on turning buildings into Teslas. We want to rip the fossil fuel equipment for heating, for hot water, for cooking out of buildings, in the same way that Tesla rips fossil fuel engines out of vehicles. We can now do that to all buildings in America. And buildings in America represent 20% of greenhouse gas emissions and 30% of carbon emissions. And so by turning all the buildings into Teslas, we can dramatically reduce the overall emissions of the United States of America, and begin to lead the world away from fossil fuel dependency. We can do that with existing technology. We don't have to invent any new technology, maybe some new software, but that's easy to do. We don't have to invent any moonshots or new hardware to do this. And so, in my view, since we can do it, we should do it, since it is 30% of emissions. So that's what my company does. We build digital models of all of the buildings. We have a data set of 125 million buildings across America. We run machine learning and statistical models on fossil fuel consumption and reduction, and totally removing fossil fuel consumption as best we can by upgrading buildings to heat pumps. And so we engineer and design and finance the installation of heat pumps. We have about $100 million from Goldman and Microsoft as debt, and have incredible investors like Elemental Accelerator, like Salesforce. I think Suzanne may be on this call, who's the impact chief over at Salesforce. we've been really fortunate to have great investors. Nevertheless, it's been horrible fundraising for our company. And I have a lot more confidence in corporate leaders who are investing in climate tech at scale, like Salesforce, like Microsoft. I have a lot of confidence in strategic and corporate investments in climate tech. I have a little less confidence in venture capital investments in climate tech. And Avra and I can talk more about that as the panel proceeds.
Really cool. I mean, Suzanne is a close friend of ours and mine, and was a speaker at our Techonomy Climate Conference in March. So we're glad that she's here. So hi, Suzanne, and we might force you to speak if you stick around. But Donnel, you said something provocative, saying that was horrible raising money. I think you should elaborate on that, because looking at your cap table, or which I can't see, but looking at the list of investors you have, it's extremely impressive. Runs an astonishing gamut, really, from what I consider to be the most aggressive, and some would even call borderline predatory, in Andreessen Horowitz, to the nicest, most holistic, human-centric Kapor Capital and Elemental Accelerator. I mean, so you've obviously rung a chord with a very wide range of investors, but what has made it so difficult in the 9 years since you started this company?
Well, I think that only less than 3% of venture capital goes to people of color and to women, which is just extraordinarily racist and sexist. It's unbelievable that in 2022 we still kind of accept this kind of practice. And so it's incredibly difficult for anyone to raise capital, and certainly for a woman or a person of color. God forbid that you're a woman who is also a person of color trying to raise venture capital. And so there's some structural barriers in early stage investing where, really it's more art than science. Early stage investors invest in entrepreneurs that they feel comfortable with or confident in, based on a set of unconscious and subjective criteria. And as once companies get started, there's more objective metrics and product development processes that people can use to determine their investments. But early stage investing is more art than science. And so it is a lot of, have you been able to build trust and credibility with particular investors who may not share your background or life experiences or experiences in the market with customers, right? And so for us, we focus on low income buildings. There aren't necessarily a lot of venture capitalists who have expertise in low income buildings across America. And so trying to persuade them that this was a viable market and a potentially lucrative and transformative investment opportunity is difficult to do, because investors want to invest in markets that they understand, as well as in products and entrepreneurs that they understand. So we had hundreds and hundreds of meetings before we got to Andreessen Horowitz and Kapor Capital, who decided to invest and help us launch Block Power. And so I think there was 205 pitch meetings, all of which were no. And then 206 was Kapor Capital, 207 was Ben Horowitz at Andreessen Horowitz, and they both decided to invest. And so we've been fortunate, but it's still miserable. And so certainly as we talk to other up and climate tech entrepreneurs, we want them to be aware of the full range of possibilities of what may occur as they're trying to put together financing for their startups.
Wow, a lot of meat there in what you just said. And I want to pursue some of the things you said, but I want to get back to Avra, but also, since Suzanne just asked a question, and I know how busy she is, I don't think we can count on her sticking around. I've allowed her to talk. So Suzanne, ask your question and we'll just go straight to you, because we love
you got it.
you.
And I'm sticking around. I'm excited that you guys are together, and what a great entrepreneur. I'm curious, Avra, and also to know what you're seeing with this kind of current macroeconomic headwinds. Where are investors pivoting focus, and how's that impacting entrepreneurs like you, and et cetera? So, what are the conversations, Avra, that you've been having sort of in-house, as much as you can say, and what are you hearing from your investors?
No, it's such a great question, right? So, I mean, again, to put this in context, it's very different from where we began over 12 years ago, but we're also in a very different place than where we were in terms of the sort of market highs over the last year. So there's a lot of macro trends that I think are still contributing into a surge into climate. So yes, there has been some sort of a market recoil coming off the highs of last year, but just in the past, I don't know, 2 months, 4 of our portfolio companies announced 100 million plus rounds. So we are seeing new types of investors in the space. We're seeing corporates that are playing a huge role in driving demand and creating pull. Thank you. We are seeing that the search for quality deals, so yes, maybe valuations are slightly less high, and a lot of our portfolio companies are thinking about how to batten down the hatches, how to extend runway. We're also just seeing that there's still a desire to have to invest in climate and to invest in quality deals. That has not changed. And then on top of all these sort of macro kind of, there's new investors, new types of investors, corporates, you've got the IRA, which will, we're just starting to hear from our portfolio companies, the sort of level of enthusiasm and, thinking about how to sort of capitalize on that implementation. And the IRA is so interesting because it will de-risk technologies faster. It's going to continue to build on what corporates have been doing, creating that demand pull to help technologies scale, to get to the maturity where actually you can bring some of these technologies into people's homes, right? Into their households. And that is so important. This IRA is pretty transformative, not perfect, certainly only a start, but pretty transformative in its focus on people and its focus on communities. This is not an investment just on the sort of industry side. And for the first time, we're seeing 60 billion in this act marked for community investment and use in projects that advance environmental justice. So I think the headwinds are still, the tailwinds are still strong, and we will overcome this bump. That's my optimistic view. Donnel, I'm curious what you think.
Yeah, I want to hear Donnel on all of that. And Suzanne, I'm going to leave your audio on so you can co-moderate with me. How about that? Whether you like,
don't you dare. I'm listening.
you can say what you want or nothing, but I'm just giving you the option. Donnel, go for it.
Yeah, one of the lessons that we've been learning from Mitch Kapor and Ben Horowitz is, they've survived multiple market downturns, both as entrepreneurs and venture capitalists, and have advised portfolio companies. I remember as the recession started to kick in 2020 and the stock market collapse was happening, I had Zoom meetings with both of them where they gave me like really helpful and useful advice on how to navigate what seemed to be a really difficult downturn and certainly could have taken our company out. Suzanne, I'd say a couple of things. I would say structurally, I don't think that climate tech venture capital as a fad is like sustainable or where we want to be, right? And so the question is, how do we take the best practices from Silicon Valley and what it does great and what it does well, and the best practices from like Wall Street and services businesses and all that kind of stuff, and can we create something new and different that results in us saving the planet, right? And like whether or not the manner in which we save the planet fits into the traditional venture capital return profile is like a question for another day or a secondary question. And so I like seeing the market move a little bit away from like frothy venture capital driven climate tech investing towards a broader, deeper, more serious and longer term commitment from a range of different kinds of investors who can provide project finance, working capital, debt, royalty-based financing, as well as VC, as well as private equity. And so, I'm hoping that the kind of throw spaghetti at the wall approach and hope that 1 out of 10 of the portfolio companies makes it big, and who cares if the 9 of them go bust, investing in archetypal founders who kind of meet that model in that game, and moving towards something where it's like, no, in climate tech, we want all 10 of the companies to do well and survive and innovate and bring whatever solutions are needed to the market so that we can create a robust climate tech ecosystem that gives us a shot over the next 10 years of reducing greenhouse gas emissions at scale. And so macroeconomically, I feel good about the corporate leadership that we're seeing, particularly from the large tech companies like Salesforce and Apple. And I think it portends well, and would encourage you guys to, as if VC is finding it harder to write checks, that corporate venture capital continues to lead the way in supporting entrepreneurs who are building serious businesses in a serious attempt to reduce greenhouse gas emissions. And so the Senate bill only helps that. I think to the degree that we have a more serious greenhouse gas focused climate tech ecosystem, the better off we're all going to be, versus like who's going to make the most money for which venture capital investor. So that's my 2 cents.
And just to follow up on that point too, right? And I don't know if this is, I imagine it's related. We think it's related, but when we are investing in our portfolio companies, and we're lucky enough to count Black Power as one of our graduates and alumni, alums, it's not writing a check and kind of turning away. It is a milestone based, hands-on. It's almost a bridge to kind of project development and government grants in the sort of hands-on involvement, which I think is why, in part, why of our 130 portfolio companies, there's actually such a kind of tremendous community that's been built, because it's not simply like a check. It's more than a check, and it's providing services and structure and support that's more to a check. And one of the things I've been hearing is the greatest challenge in scaling climate solutions is not about money, but about people. And I think that's very real, the work, like training and skills and workforce. And so that is something we should all be focusing on.
Okay, both of you are so great and so good to have Suzanne. It's interesting, Caitlin, who's here, my colleague, and I had a prep call with Kim and Sophie of Climate Tech VC just the other day for our conference, which we're working towards. They pretty much said pretty straightforwardly that while there is a major kind of drought in VC, it is not hitting the climate tech ecosystem nearly the way it's hitting the rest of the economy, and that's great. But I want to go back to this point. Donnel, you're good with the zingers. You use the word fad, and I want to drill down on that a little bit. We hear there's 180 climate tech venture capital firms now. We also are in an unprecedented existential global crisis. Is it really fair to say it's a fad if suddenly a ton of people want to invest in this, even if they don't really know what they're doing? And isn't that generally a good thing?
Well, I started Black Power in like 2013, 2014 at Columbia Business School. And I remember one of the very first pitch meetings I did was with, I don't want to say his name, but there's a very famous angel investor in New York who is an early investor. I'm going to say an Instagram or Pinterest. I'm going to say he was an investor in one of the two. So very famous, written books, high profile. And when I was doing my pitch, he pulls out his BlackBerry. This is 2013, so a couple people still had BlackBerries. And he ignores my pitch and starts sending an email. And so afterwards I go, well, hey man, you didn't even hear me out. You didn't even give me a chance to talk about my climate tech company. And he goes, you know what, Donnel? The truth is I invested in clean tech in 2008, 2009, and I lost so much money that I can't even emotionally and psychologically process the idea of investing in another clean tech company. And as a matter of fact, this is off the record, not to be repeated, when I pitched Andreessen Horowitz, their feedback was, this was 2014, we are not allowed to invest our LP capital and venture capital into clean tech companies. We actually are going to need we like you, so we need you to change your PowerPoint presentation around your pitch deck and remove all the clean tech language and come in and talk to us about what a non-clean tech go-to-market strategy might look like, right? And so I just mentioned that.
Public events, by the way, go on.
No, I just mentioned that to say there was a clean tech 1.0, right? Where there were a lot of people, Kleiner Perkins, lots of folks put a lot of money into clean tech, and then it like didn't work out, quote unquote. And then there was this like valley of death where no one wanted to invest in climate tech. And now we're back and we've rebanded from clean tech and now we're climate tech and now everybody wants to get involved. The science hasn't really changed, right? Between those two periods, other than an acknowledgement that maybe, if anything, the rate of climate change is accelerating at a faster pace than we realized. And so I just don't want to be too dependent on Silicon Valley business cycles to get us out of the mess we're in. And so I am interested in other kinds of participants in the sector. And I hope that this is not a fad, that it's a long-term macro trend. But I do worry, as someone who caught the tail end of the last downturn of clean tech 1.0, what happens if 24 months from now, someone hasn't made a bunch of VCs $1 billion, right? Like what happens then?
I think the question of the returns is we're not going to be able to go into that in enough detail to really do it justice. But it is stunning to me, the zeitgeist shift that we have experienced. And I just want to underscore that. Let's remember when Hillary and Trump debated in all three times in the 2016 presidential election, there was not one mention of climate at any of those debates, which is scandalous, and I blame Hillary for that. However, here we are, just 6 years later, and we've got 400 billion invested by the US government in climate remediation, which is a radically big change and long overdue and not enough, but certainly welcome. And my own opinion is, if you live in the Colorado or the Rhine or the Yangtze or even Hudson Valley where I live, you're not going to forget that the climate is really screwed up anytime soon, because it is really bad. And that is good and necessary. And the problem, I think, that we can spend the rest of this time talking about, and maybe Suzanne wants to jump in on this too, is, given that there is this vast amount of money flowing suddenly toward this space, how can we make sure that it is most effective? Maybe any of you want to address that.
Let me add a question onto that for Avra and Suzanne to maybe tackle, which is, it may be that the breakthrough climate solutions that are needed aren't venture capital backable. So something like, battery storage, right, as a category, or micro hydroelectric power may be like a CapEx / infrastructure investment opportunity, but not a venture capital opportunity. But it may be that one of those non-VC backable technologies is the key to unlocking massive greenhouse gas reduction.
Wait a minute, the reason it would not be VC-able is because of the time scale, or what's the reason?
Yeah, that it's capital intensive, it's not software based, it's highly regulated, and therefore the time scale and risk profile. Yeah, fusion, even certain kinds of carbon capture, although there is a lot of carbon capture money. And so the interplay between which technologies the government feels comfortable funding versus which technologies venture capital and corporate leaders feel excited about, there's a Venn diagram of like, all right, well, there's a bunch of technologies that VCs love that may or may not be the breakthrough technologies that the federal government should fund. And so Elemental Accelerator is really interested. They have such a great relationship with the federal government. How do we manage that interplay to make sure that we're actually investing in the hardcore technologies that are required, that may not meet the current business needs of the current fossil fuel based ecosystem?
Yeah, it's such a great question. It is such a great question. And I'd be remiss to pretend I could even begin to answer it, but I think it's worth saying. So just to double tap what you said initially, can we create something new and different? And I think that there's something there. I don't want you to feel alone in that sentiment. Like, it is true that VC funding isn't perfect for every type of technology, given, time horizons to scale, CapEx, all the things you mentioned. I do think climate VCs, and I'm not speaking for all of them, the appetite for investing in technology has shifted. I mean, from when I was raising as COO, a Jump, with a hardware product that was in the public right of way that no one wanted to touch with a 10-foot pole, it is a different environment than it was even in 2014, right? So I think climate investment from the traditional VC side is shifting, adjusting, and growing. I think you have new types of investment, like from the industry that we're seeing, and also in terms of like fueling innovation prizes and thinking about ways to pilot new technologies. And then you have the government funding coming in at historic levels, right? So I think it's a combination. I think there's more types of vehicles we could create that are blended, the focus on project finance, using the government funding to think about scaling technologies and creating a demand pull, I think is really significant. I kind of think it's going to take all of it. I think it's going to take the industry. I think it's going to take government funding. I think it's going to take some amount of climate VC investing, plus new forms of vehicles, like you mentioned, around project finance and blended capital.
Okay, Suzanne, do you want to jump in? Are you still there? I mean, maybe
I think she left us.
I
Well,
knew-
I just,
oh no, she
yeah,
just stopped talking. She decided she didn't want to talk. Okay,
Oh,
if you
she's
want to say something, raise your hand, Suzanne. Go ahead. Sorry, Donnel.
no, yeah, the part of this that I am very excited about is that societal across the board shift in how seriously all of us are taking climate change at the household level, consumer level, the new generation of Gen Z, obviously the federal government, the state government, municipal governments, corporate leaders, and VC. So like the macro trend of everybody being much more focused on climate is incredibly positive and incredibly exciting. And as we like co-design how to actually make this all work, I want us to think creatively and differently. So let me just say that, like, I'm with you in that I'm incredibly excited about the kind of macro economic shift and focus on climate. And the question is, how do we build and sustain that? And I think that it may be different than some of the traditional VC technology cycles. And so that's my question, but I am excited.
Here's a possibly left field and maybe wrong, irrelevant question, but I think it might be pertinent. One of the interesting things that came up in our carbon accounting thing was when we were talking to this guy from the Columbia Center for Sustainable Investment. He was talking about how border adjustment credits, which Europe has put in, could only really be used if you actually have a price for carbon, which Europe has. And his argument is we will inevitably have to have border adjustment credits in the US to remain competitive, which will force us to also have a price for carbon, which I thought was a very interesting argument. But the reason I'm mentioning it is, would a price for carbon in the United States indirectly or directly potentially make it easier for investors, VCs, or others to get legitimate returns of the type that we have to see them get if we're going to see the money continue to flow? Either one of them.
Well, Avra went to Harvard, so she can, that's a tough question, and Avra can, what do you think?
I'll take it. I am not an expert on these things, on this carbon credit specific question or carbon cap. I think anything that helps contribute to demand, I think transparency, I think accounting, I think data, whether it's mandates, I would love to see more mandates. I think that that's an important, lever that we haven't effectively pulled yet. But I think any type of data reporting and feedback loop will help make this easier, make investment easier, but also just raise the actual efficacy of the climate technologies that are being scaled.
Yeah,
and that's an important point too. Yeah.
I mean, I agree 100%. And I do think, like, if we could get a price on carbon, that would dramatically shift things. I mean, if we could sell verifiable, carbon credits or carbon offsets that had a firm, market price that we could bank upon, we could bank on it, right? Like, we could go to Wall Street and leverage, future carbon credit sales as
Right.
part of doing upfront retrofits or CapEx or R&D in a way that's more investable. I do think one of the things that I am interested in learning more about, the crypto conversation you guys had a few weeks back, is, is there a use case for blockchain to to bring stability and accountability to the carbon offsets market, or at least the voluntary carbon offsets market, and therefore kind of put in a price on carbon in the United States based on the voluntary markets and what people are willing to pay, including consumers and corporations. So we at Block Power are starting to work on that with some of our corporate partners. Like if we green a bunch of low-income buildings in Atlanta and generate tons of avoided carbon emissions, can we sell that to an Apple or a Microsoft or a Salesforce or a Google to help them with their sustainability commitment, which only is becoming more important as they have to report their climate disclosures under the new SEC rules, right? And so we are headed that way, but if we could get to a firm price, that would be a game changer.
And just on that, just to follow up, so there's federal legislation, right? And there's federal mandates and caps, but on a local level, I'm sure Block Power benefits from transparency standards in buildings, right? Like on a local, on a state, on a city ordinance level, there's a lot of sort of transparency, accounting, reporting. The SEC disclosures are a huge step that coming together are going to make the industry move even faster. And that is exactly what we want to see.
Yeah, really good point. I'm going to have to watch this video afterwards to even remember all the things that are said, because then you two are really saying some meaty things. But now I have allowed Suzanne to talk again because apparently Zoom just shut her up inadvertently. So she says she wants to say, but before you get something, Suzanne, because I know you have another question, Tara LeMay, one of the other smarter people that we know in our techonomy community, and we're so happy to have you here, Tara. You had something, could you ask it? I let you talk.
Yeah, am I unmuted?
No, yes, you are. Go ahead.
So I'm just wondering, what we see the ecosystem like of the large corporate players coming in. And like in the very early stages of internet development and early funding, we saw them very active. Before sort of software took over and distribution was easy. And I think we have a similar case here where distribution is really challenging. The legal frameworks are challenging. The CapEx, as pointed out, is very challenging. So I sort of wonder if we see a very different relationship with both innovation of large companies and then maybe their corp dev and partner building looking differently in this space than it did in late internet and late software development.
Very good. Who wants to tackle that? Maybe Suzanne wants to answer that.
I know. I'm so happy to see her.
Yeah.
Yeah. And I appreciate the question. I just want to underline so much of what you said and just maybe make one new point. But I think to the last question, partly what I'm seeing, and Avra mentioned it a little bit, is looking at all different kinds of investment tools and technologies off the balance sheet, green bonds. I think this is a very interesting moment for tax equity investing, which really propelled solar, and so venture is one component. Project finance is key. I think where I'm seeing big corporates is looking at, and for some of these like direct air capture, which are kind of longer term solutions, venture may not be the best, to Avra's point, but I think there is, what I'm seeing large corporates do is look all over their balance sheet, which I actually think is great. Also in a macroeconomic heaven environment when budget's hard, balance sheet money is easier. And I think that the returns have proven themselves over time to be competitive. So, we did $1 billion green bond. Apple's done that. And so I just think there's a lot of levers to pull. And I'm seeing more and more corporates pull them. And I'm excited about that. I do think, I want the carbon markets there's a lot of carbon cowboys out there. This is a mainstream conversation. If you all didn't see the John Oliver segment this Sunday on the way, he really just trashed sort of corporate's role in this net zero program. So, project origination is going to be, really important, I think, for people to invest in and quality and et cetera. And the fine point I just wanted to put on it is for any investor whether using venture or balance sheet or, finance debt, is that, part of the reason we love Block Power is that solutions that affect people, thinking about this notion of a just transition is really, really, really critical. I'm thrilled on the 60 billion to communities. I think that, climate change is impacting, communities that are already hurting the most for the most part. And so great news in that renewable energy can actually save people money. And, we need to have these kind of win-win situations that really, in my view, put people at the center of the climate investment and have a kind of holistic a thesis around it. And I think corporates are doing that more and more too, which is cool.
Well, and let's take a brief moment to acknowledge Salesforce's unique leadership in this arena, which I think most people here are aware that, your job, the length of time that Salesforce has had you there and people trying to think in these terms is uniquely inspiring to, I think, the entire business community. Mark, of course, is a good friend of ours, as you know, Suzanne, and has been an inspiration to even to the creation of Techonomy, for God's sakes. But anyway, I got to ask you, what is a carbon cowboy? What do you mean by that?
It's just sort of the Wild West. There's no, you were just talking about pricing. There's no regulation. These markets are voluntary. The price is wildly fluctuating. There's 1,000 solutions now on measuring your carbon footprint. There's thousands of, projects that are marginal around nature-based solutions, quite frankly. I mean, John Oliver kind of got a lot of it right.
Okay.
And so that's, I would just say there's a lot of people, it's sort of the gold rush, and we're going to see who's going to shake out, I think, over the next 5 years.
Okay, Matt Quint, you asked a question in the Q&A, but I've just turned your mic on. If you feel like asking it aloud, I didn't get an answer on when I asked you that, if you wanted to. Can you? Go ahead.
Thanks, David. Great to be here. Donnel, Columbia, I run the Center on Global Brand Leadership at Columbia Business School, so great to have your presence here. And David, the Columbia Center on Sustainability was my first job at Columbia, so back when it was brand new. So I wondered if you guys could talk about what as I put it in the Q&A thing, the homeowner or the common man, that kind of scalability opportunity is here on both, potentially the startup or large commercial or an investor angle is, right? That idea that we all want to be contributing to this, but it's hard to know how we can activate our dollars to actually make these kind of climate change impacts, or are the challenges of regulation, various different state-based rules, et cetera, a challenge to that? Or is there an example like in Texas where there's some different regulatory rules that maybe that's an example for how we could maybe change the nation if we adopted something like that?
Right, and isn't the IRA intended to stimulate that sort of thinking quite aggressively? Yeah. So either one of you, please jump in.
Yeah, I can just start by saying, we at Elemental invest in, geothermal and technologies that help with extraction. The flip side of the fact that there's, we've ruined our planet is there's a lot of different opportunities for improvement. And so when we think about our investing portfolio, again, we have everything from sort of geothermal to sustainable, a platform for buying used clothing and making it seamless and sustainable and bringing on traditionally excluded mom and pop vintage shops, to a company called OhmConnect that reduces, works with utilities and communities to reduce the cost of electricity by encouraging behavior, right? And that is so profound, right? Those behavioral nudges that get people to turn off their lights and go for a walk during a certain hour of the day to manage demand and supply. There's so much room for improvement across the climate spectrum. And so I think, again, it's sort of, yes, we need these bigger technologies, these bigger investments, and we also need the smaller ones too. And so we're sort of agnostic. We're not necessarily, ourselves investing 100 million into fusion, for instance, but it's about what is transformative. And there's so many different layers and levels to the work that needs to be done.
Really
yeah,
good.
I mean, going back to the carbon cowboy, the Wild Wild West kind of stipulation, or cowgirl. I think that I mean, there's carbon pricing, but what about carbon transparency? What about making it easy for all of us to understand, I know the holy grail is, what's all of our footprint, but what's the footprint of our home, which is, it's not, I'm jumping on a flight. That's, the airlines are starting to do that. Google's starting to do that. But what's the carbon footprint of my house or my kid's school or my community or my synagogue, right? Or my mosque? And like providing transparent data to everyone in the way that like a Fitbit provides transparent data around individuals' health, right? Community health and or transparency of carbon information as a proxy for community health, for building values, for sustainability of buildings. Like, do you want to go work in an office building and leave your house where you've been working remotely? Do you want to go downtown to work in a building that's burning a ton of fossil fuels and super unhealthy and terrible for the planet? Or it's going to matter for you as an office worker, whether or not you're working in a skyscraper that's, sustainable, right? And so transparency and communicating carbon is going to be really, really important and make it easy for all of us to make decisions for ourselves and our family about what we're going to buy, what we're going to consume. And so that's one part. I mean, more specifically, we filed with the SEC to create a fund for regular retail investors who aren't allowed to invest in a venture capital fund or in a bank, in a Wall Street transaction or green bond, for example. We made it easy for folks to invest in a $25 or $50 community impact note. So you can invest and the money is used to like green a public school or a church or a synagogue or a mosque, a community building. And, you make 4.5%. I think interest rates are going up. So maybe we're paying 6.5% now. But we do want to democratize climate investing for all Americans as well. So neighbors can invest in helping their neighbors to go green.
When you say we, Donnel, is Block Power issuing those instruments?
Yeah. We've raised, I want to say we've raised like $2 to $3 million from these climate impact notes, which are online securities that we filed with the SEC to be able to offer. And so people invest and we make like 4 to 7% returns, and we use the money to green like underserved buildings across America. And so we're going to be offering more and more of those. We want more and more people to have paths into the climate tech ecosystem as customers, as investors, as workers. The more we can open this up for everybody, the better off we're all going to be, we think.
You guys are super innovative. Somebody named Carrie is going to ask a question. Please identify yourself. I let you talk.
Yes. Hello. I'm thrilled to be here today. Thank you, all three of you. David, this is my second week with you, and it's wonderful each time. Avra and Donnel, I want to thank you so much for especially reaching out to people and to making people count. I think they are by far our greatest contributors, the players. I've been watching Kate Raworth's economic theory, if you like. It's a new model called the donut economics. And I've heard that Amsterdam has taken it on and using it. So are other communities across the world. And I'm looking even just, I live in London, Ontario, Canada. I found that there are 3 people who are embracing it. And I'm thinking a lot of communities want to embrace the values that you are supporting. And are you looking for communities that, for instance, are embracing or coupling with donut economics? I'm looking for practical ways. I know that the Council of Canadians also is looking at, it's called a just transition for communities in Canada. So I'm looking and hoping for an upsurge of communities, but also citizens who are behind you and who want to work with you too, which I know the whole of Techonomy is looking to support that. That community.
The Council of Canadians, which probably hardly anybody here knows about, it is an astonishing effort that Canada has launched to basically incorporate the voices of the people of Canada into decision-making in a very methodical way, which would be a whole session for us to discuss sometime. But anyway, please, Donnel or Avra, please.
Yeah, I mean, I can jump in quickly. I mean, we at Block Power, we're very focused now on trying to decarbonize whole cities. And so, the first 2 cities in the world to commit to being fully decarbonized in the building sector are Ithaca, New York, and Menlo Park, California, where all in. There's 15,000 buildings that we're going to shift from fossil fuels to 100% electricity, and the electricity is going to be powered by renewables. And so we want more cities to sign up. So find a city in Canada that wants to fully decarbonize over the next 7 years, and we're happy to partner with them to help make it happen. And I think as we take on the mission and challenge of decarbonizing whole cities and demonstrating what's possible, more and more cities and individual homeowners will be inspired around the world, and that's kind of where we need to be.
Avra, summarize it all up, answer that, and give a closing thought. I'm gonna have to, we gotta let Donnel catch his plane, no doubt.
Okay. That's too much pressure, David. You can't do that to me. I'm absolutely going to look into it. I mean, again, one of the really exciting parts of the IRA is the focus on community-led and community-focused deployment of technologies. So, Carrie, I can follow up with you offline if there's examples that we come across that would be beneficial. But it's very much our focus. It's very much the focus of the IRA. I mean, some would say 60 billion doesn't go far enough. But there will soon be, I think, more practical examples of community-led deployments that talk about this dual perspective. And I think that all I'll say is I actually hear this panel as a call to action, that there's more for us to do in terms of bringing innovation together on the financing side to make sure that the implementation of the IRA and the scaling of the technology does so in a way that is equitable and in a way that goes faster and maybe has a slightly different return profile. So my summary here is that this is the beginning of an important conversation. There's more to be done, and to the extent we can all continue to get our creative juices flowing around bringing capital to bear to be the most effective, I feel like that's what Donnel has asked us all to do.
Great, wonderful.
Does that summarize it for you?
Pretty good. We do have to wrap, and I'm sure Donnell's relieved by that. But you're pretty darn good at doing this from an airport, I gotta say. But I also want to just say a quick hello to my cousin Meredith Wheeler in southern France, who I see is there. But I wanted to just, Donnell's left. But anyway, it's amazing what of a change the mood we are in the midst of right now. I mean, I think, for example, this sudden upsurge of something that I have long hoped for, of a resistance to private aviation, I think I would bet within 3 to 5 years, it will not be possible to fly private in most parts of the world under most circumstances. And that's a good thing from the standpoint of personal responsibility, to go to Carrie's point. I know that's not an investing point, but it's just one that comes to mind because of the nature of the shift. When what's her name, the Kardashian, whatever her name, I don't know those people, but couldn't decide which private jet to fly with her boyfriend. And that was a really catalytic moment that we are glad to have seen happen. And I think we are in the midst of a shocking change, a shockingly good change at a shockingly bad time. And this discussion, I think, touched on so many issues that need further exploration. You can be sure that Techonomy and Worth at our events, virtual and physical, will be continuing to examine them. And thank you again, Avra. I don't know if Donnel is gone entirely, but if he isn't, thank you, Donnel. Thank you, everybody, for being here. There's some great people I saw that are on the call that we didn't get a chance to ask their questions, but I'm sure would have interesting things to say. And please do come to our Techonomy and Worth Health and Wealth of Our Planet, September 20th, here in Manhattan, all day, with Eileen Fisher, all kinds of other great people that I mentioned earlier, big companies, small companies, the Club of Rome, etc. So thank you again, especially also Avra, for being willing to help with this on the relatively short notice. So thank you, everybody. We'll see you 2 weeks from today. No, actually 2 weeks from yesterday, we're going to likely have a session with EDF plus business, talking about why environmentalists must work with business. So that'll be Wednesday, September 7th. And then I believe Avra is going to help us with her team do another session on the Thursday, which will be the 15th, I believe, of September, when we'll meet a bunch of climate tech startups. I hope that's going to happen. We're working on that. Thank you, everybody. And we'll see you again soon. Come to our conference. Bye-bye.